Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I wanted to give you an update on my current recommendations, and I really want to stress the theme of diversification. You know, I don't have a crystal ball, but this market is going to be a little bit different than the go-go 90s, and I think diversification is really going to be important. And that diversification can be accomplished even with limited investment vehicles. So with that, let's get into it. This is the S&P 500. As the listeners are aware of, I've been short the S&P 500, meaning that I am gaining as the market goes down. So in my portfolio, I'm 10% short the S&P 500. So every day that it's down, that position goes up in value. And just because I am short the S&P 500 doesn't mean I don't have other equities, because I do. Uh, this is just uh, this is just one position in my portfolio. So what got me bearish on the S&P 500? Here's our bullish channel. Here's our resistance level, and prices were outside of that level, telling me that the index was overbought. And then I look down at my relative strength index and I see lower highs while the stock market's making higher highs. And that uh, is flat. That starts flashing a caution sign. Beware, a change of trend is coming, in this case from up to down. So uh, let's take a look at the shorter term here. If it will change for me. Okay, so this is a daily chart. And so here's where I went short. Prices bounced around. I was short against 6,100. As long as prices stayed below here, I was okay. And we got a breakdown below our confluence of moving averages. And then we got a retracement back up to those moving averages. And now we've hit a new low. So this was a type 2 convergence, which means nothing probably to you, but it's been fulfilled. I'm still expecting more. So what I do on this kind of thing is, you've seen me with China, with Exelon, with some of the other holdings, stock holdings that I have. On up days, when they're up 1.5%, 2%, I sell a little bit. I sell a little bit. And then when it corrects a little bit, I buy a little bit more. Well, since I'm short on the S&P 500, betting that it's going to go down, when we have a big down day like Thursday, I'm covering some of my shorts. I'm selling some of that short position. And then on Friday, we had that huge 90 point day on the S&P 500. What was I doing? I was buying back some of those shorts because I had this resistance confluence of moving averages here. And then today, as we hit a new low, I was selling some of those short positions that I bought on Friday. So it's the same principle as all the other positions that I have, only in reverse, since I am short the S&P 500. So again, I had about a 10% position in my short position, and now I'm probably at 7%. If it opens up tomorrow, as long as it stays below 6,000, it opens up, I'll probably buy a few of those back. That's kind of how I use that. Here's a stock position that I've been long. I own. I think it's going higher. Exelon, EXC is a symbol. The big descending triangle, descending resistance line, flat support line. Prices broke out. I purchased. It came back down, retested it, breakout. What do I do when things go down? I buy a little bit more. I buy a little bit more. And what have I been doing the last 1, 2, 3, 4, 5 weeks? I've been selling a little bit, selling a little bit, selling a little bit. Um, Putting that, taking those profits and putting it into the bank. And uh, that's a good way to do that. But look, utility sectors are defensive. EXC was up 0.75% today. It was nice to have it in my portfolio. FXI, China, large cap, ETF. Um, as on the reviews, the weekly reviews, I've been saying sell some on these big up weeks, sell some, sell some. Now, the last 2 weeks, we've had a little bit of down movement. We were down 2% today. So, what was I doing with my FXI China large cap ETF position? I was buying a little bit. I was buying a little bit. So, still bullish on China, kind of giving us a good opportunity here. Saudi Arabia ETF, KSA, big symmetrical triangle going back 1, 2, 2.5 years. So we get the breakout, and I give a buy recommendation on the 21st, and now we've gotten a pullback. So what am I doing on down weeks, like or down moves like today? Buying a little bit. Let's take a closer look at this because it gives us more information. And I covered this on Friday when I did a review of Saudi Arabia. This was the chart, and I said we're getting a cluster of moving averages coming together with the prices below that. We'll probably get another down day or two. Today we got down to about 41. This was Friday's chart or Thursday's chart. So what I thought would happen is happening. I think we're about a day away from these moving averages all coming together. And at that point, I will buy a bigger amount because when this moving average cluster comes together, either prices will pause, which is a type 1 convergence, or they will retrace back to the convergence, which is a type 2. And so I want to uh, lower my cost basis, increase my size of my position. And then when prices, if they come back to the moving average and they're up 3, 4%, what will I be doing as they go up? I'll be selling a little bit, and then we will see whether it can break through the 41.8 area. So watch some Saudi Arabia today. Point and figure chart. The last few down days haven't done anything to our point and figure chart. We still have our bullish trend line. We have our bullish price projection of 59. We're at 41. That's 18 points of upside. That's 40 some percent potentially. So again, I like this. I actually like when prices go down a little bit. It gives me more of a chance to add to my position because I will never go out. And let's say everybody has their own parameters, but let's say in an ETF index, I might own 5% of my portfolio in something like this. My initial buy, I might buy 2%. And then when I get, I'll gradually up that position. And I'm happy to answer any questions you might have on these kind of questions. So still bullish on Saudi Arabia. Fixed income. One of the calls I'm the most proud of, and because this was really contrarian. Everybody said, oh, interest rates are going up, interest rates are going up. And they probably will eventually. But the chart said not yet. Rates are going to go down and bond prices are going to go up. And what told me that was a nice 2-year inverse head and shoulders pattern. 2-year patterns are good size. They're usually pretty reliable. So we got a left shoulder, we had the head, we had the right shoulder. We broke out, we came back, tested that breakout, and I suggested buying it here. So since then, we've seen a couple of up weeks. So what am I doing? Each up day, I'm selling a little bit. I'm selling a little bit. I'm taking some off the table, small increments. I'm putting that money in the bank, or I'm adding to another. Maybe I'm adding this money to the China ETF, which was down. So that's kind of the way that I utilize these. So now I want to cover something that is really non-traditional, and I know that especially us that were around in the 90s and the 80s, where stock market just went up every year, and it was easy to buy stocks and hold them, and stocks outperformed everything else. I think we're entering a different era where you're going to see something similar to the 70s, where stock market didn't do a whole lot, but commodities really went up. And what's telling me that is the size of these pattern breakouts. This is silver, and this goes back to like 2008. So this is just a massive consolidation, and prices have now broken out. And this pattern, the price projections arrived at by measuring the base of the triangle and projecting that distance upward gives you a $64 price projection, and we're currently at 29, let's call it. So the upside is really, really large. It's not going to get there tomorrow, and it may fail, but usually these patterns are pretty solid. We got a nice bullish trend line here. So, is this a once in a lifetime opportunity? I think it could be. So, not just on silver, but how about copper? Again, 2008, this pattern started, and we're on the verge of breaking out of that. And here was the smaller triangle, which was still 2 years in the making, that got me involved in copper before we possibly get a breakout to the upside. But if we get a breakout above 475, the price projection is $8. That's a big move. But let's take a look at this triangle and then the up move. This is actually the copper future chart. Now we're going to look at the copper ETF. And here's the symmetrical triangle and the breakout. Now, I got involved way back here for the viewers that have been with me, on a smaller inverse head and shoulders pattern. And we purchased here. That was the initial buy. It got to our price projection of 31.5, pretty much nailed it. We sold, tried to buy it back here. It went down lower. Oops. It went lower, came back up. I saw something that was bullish to me. I bought. Prices went back down, but didn't break my stop. And now they've broken out of this smaller triangle, suggesting $34, which would give us a breakout of this larger triangle. And so, again, this is kind of once in a lifetime opportunity, possibly. These things can fail, and copper and silver are really volatile. You can buy these, though, through an ETF, and that's what I'm suggesting. So, you know, uh, again, you got to be careful when you buy. You got to buy incrementally. You don't want to just dump a ton of money into it. Copper, you could probably buy at this point. Silver also. Platinum is the last commodity that I've given a recommendation on, and we're kind of still in this big pattern, uh, 4 years in the making. So it's not as big as silver, it's not as big as copper, and it's kind of in the middle of this mess. So it's kind of lower on the totem pole as far as the strength of the recommendation, but I still do own it, and if it can ever get through 97.5, we got a $144 price projection. So still bullish on platinum. And for cash, so real quick on maybe asset allocation. Currently, let's say I'm 10%, 8% short the S&P 500. I own some utilities like Exelon. Let's say I have 10% in utilities. Let's say I have, uh, you know, 10% in emerging markets in China. If you can't buy China direct, look at EEM. It's about 15 or 20% of EEM. Emerging markets ETF is the China large cap. So maybe 10% in emerging markets. And then I probably have 20%, 25% in fixed income, the IEF, 7 to 10 year treasury. I have TLT, the 20-year treasury. I have SHY, the 1 to 3 year treasury, all those different uh, maturities. And then I have the rest of my money, probably, I don't know, 35% in TBIL. This is a 3 month treasury ETF. So it has very, very low volatility, but it's paying you over 5%. It's paying you more than the 20-year treasury ETF. And the volatility is nothing on this. And it's telling you, be careful out there with your investments. So I have a large amount in here, and if you're not sure what to do, 5%, is pretty good over a 12-month period. It pays monthly. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends. Have a great evening. Good trading. If you have any comments or questions, feel free to send them my way. Have a great night.